Hello, in this video I'll break down one XPX 0 DTE trade that produced $4,100 profit in today's trading session. We'll go over the exact daily key level strategy I use, showing the precise entries, stop levels, option strike selection, and take profit levels for the trade using a structured key level based SPX trading strategy designed to be repeatable from session to session. The trade was executed using the day trading GPS SPX daily key levels V 3.0 indicator, which was just released a few weeks ago. It is a framework specifically designed for trading both SPX 0 DTE and 1 DTE options. The indicator automatically generates daily SPX key levels before each session, which are used to identify trade entries, stop loss levels, and take profit target levels that can be used for scaling out trades level to level while managing de-risked remaining runner positions to capture larger moves for greater profit potential as price continues to move in your favor. This creates a repeatable daily trading framework that helps traders execute both quick scalp trades, if that is their preference, as well as regular day trades for capturing and managing larger directional moves level to level for greater profit potential during the rest of the session. In this video, we will also be taking a look at additional indicators to use along with the daily key levels indicator to help confirm trade entries at key levels. Okay, so some of you may already be familiar with this indicator from watching our other videos on this channel. For those of you who are not familiar with this indicator, this is going to be a condensed video for today. So I would invite you to look in the description of this video and you will see links to an overview of the indicator as well as the new features video for the V 3.0 version of this indicator, which was just released a few weeks ago, as well as a Google Drive link that will take you to a document that has links to other various topics of videos on this particular indicator. And there's also links to sessions to much longer videos that go into more detail about the daily key level strategy, what all the levels mean, and also more in depth about the strategy. And then there's also a video that goes into our lotto options strategy, which is for the time frame of 2 p.m. to 3:45 p.m. later on in the session. Okay, so in today's session, we're going to do something a little bit different today. We're going to also look at using additional indicators to confirm the trade entries with this indicator. So this is using an additional indicator which will help with both bullish and bearish entries as far as helping with confirmations of trend at entries, both bullish trends and bearish trends. All right, so to start off, we're going to look at two different ribbon indicators. Both of these indicators are free on TradingView. The first one is going to be Annie's ribbon, and the second one is going to be the Madrid ribbon. So they're very similar ribbons. There's slight differences between the two, but they're both can be very useful as far as helping to confirm entries at specific key levels. They are powerful confirmation indicators when used in conjunction with an indicator such as this, where you're taking an entry at a specific major key level for today's session. So first off, we'll just go ahead and turn on Annie's ribbon here. And as you can see, this is a combination of many different moving averages, and it also has two main moving averages here, which are highlighted in yellow, and the rest of them are regular lines that are not as thick. And what this indicator helps do is to help with confirmation of entries, so you're not getting entries at certain levels where things may be choppy or there may not be no real clear trend direction. So it's not absolutely necessary to use this with this particular indicator. However, it can be very useful. and it can also give you more confirmation at specific key levels. And the idea here is to take better trades, less trades, and take trades at specific times during the session when there is giving you the most edge of a clear trend, and that would be taking a bullish or bearish entry at a specific key level, as long as it also lines up being either a bullish or bearish trade opportunity based on the confirmation from the other indicator. And so in today's session, we have here, even though this was a move down at the beginning of the session, we have a lot of chop because we don't really have this ribbon being one particular color. So we have a mixture of colors here, and we're getting some mixed signals here. And then finally, after it goes down to test the PML level, we finally get a breakthrough with this candle here on the 1018 candle, where it breaks above both of the yellow thick moving averages here. And as you can see, the entire ribbon has turned green, where there's no more red at all. So on this candle here, we have the 1018 candle, which is helping to confirm our bullish trade entry off of the PML level here. Now the other ribbon is basically very similar. This is also a free on TradingView, and this is called the Madrid ribbon. And as you can see here, this one is slightly different than the other one, although one of the things with this one, you don't have the two thick yellow moving averages that are used to gauge, additionally gauge what's going on in the ribbon. However, it does give all of the other ones. But as you can see here, the entire ribbon on this one as well also turns green on this 1018 candle, which happens to coincide with this break above the PML level. As you can see here later on in this session, we have a down move. At this time, later on in this session, I was not able to do any more trading, but if I was at the desk during this time, then this would have been a bearish opportunity. As you can see here, we started turning red here, and then finally the ribbon turns all red here. And then we have a close below the important YDH level, which is yesterday's daily high. At this time too, this is after the 2 p.m. window for the lotto option strategy. So if you take a look at that video that's in the description about the longer session video that also has the lotto bonus lotto option strategy that's gone over at the end of that particular video, then we go over all the rules and process about how to trade lotto options during the later part of the session, and what are the risk management rules as far as allocating money towards lotto option trades, and how to place them, and what are the different types of lotto option trades that you can look at. So I would invite you to take a look at that particular video. Okay, so now we've established that here is the 1018 candle here. So we have this one, and we'll go back and just take a quick look at this one again, where you have the break above, or the break above both of these thick yellow moving average lines here. And we also have the entire ribbon turning green here as well. And it's all happening right at this particular key level, the PML level. All right, so now we'll move on to the trade of today in the next screen. Okay, we'll get into the trade of the session here. So again, as we pointed out in the previous screen, the 1018 is the entry candle that was based on the close above PML after this initial chop, and reconfirmed by the ribbon indicator, turning all green. So this is our entry here. It's much like yesterday's entry for our video yesterday, in which we had a bullish entry off of the PML level. This is your standard stop loss. You simply go into the user control panel. You choose between tight or standard stop loss, and then it will plot the stop loss for the PML level on your screen. Now, as the other main key levels that you take trades on, the tight stop losses are going to be the QL levels and the midpoint levels. However, on the PMH, YDH, YDC, PML, and YDL levels, which we don't have YDL here since it's way below for yesterday, and we just wanted to zoom in on this. Those are done in the user control panel, which I'll show you now. So you just go into the user control panel, you go down to the trade section for those particular levels, which is right here, enable stop loss and take profit levels. You don't have to use the take profit levels for this for a specific take profit level. You can instead use the key levels given by the indicator to guide you through, especially if you're going to be doing a regular trade like we're doing today, where we're going to manage the trade level to level and try to capture a bigger move. So anyway, you go down here and we have enable bullish entry stop loss for PML. Well, you also have it for all the other levels as well, and there's also a bearish section as well. Here you pick standard or tight. It's always recommended to use the, or at least we recommend that you use the standard stop loss, as we've said in all of our different SPX session videos. That is the best stop loss to use. However, for those that prefer to use the tight stop loss, we also have that. That works out in less situations than the standard stop loss. Sometimes both of them will get stopped out. Obviously, there's going to be times where you have losses on trades like we did yesterday, where we had one loss to begin the session and then we had a very large winner. However, we do recommend that you use the standard stop loss. However, that is up to the trader. And then here we have, if you prefer to have a set take profit, here you can enable a take profit, and then you can simply either go with the standard 2-to-1 reward risk multiplier, so that would be 2 times the risk. Or if you want to do less of a scalp, you can go down in 0.25 increments all the way down to 25 for those traders that like to do micro scalps. However, you can also go up, and you can go all the way up to 30. So 30 is the max. Can't go above that. Okay, so we have our standard stop loss here, 67.55.72. Our entry was double confirmed by the ribbon indicator as well as the close above the PML. Today, yesterday we just went over the standard option plays. Today we're going to look at both the standard and the out of the monies. So this is how you do the out of the money plays. We did go over that in yesterday's session, how you do go through the process of determining the 2 out of the money strikes you can also use on any given trade. However, in today's session, we're also going to look at those exact strikes and what the entry prices were, and then follow those as well, so you can get an idea of what the difference is as far as cost versus and benefit of using the at the money standard play versus the 2 out of the money strikes. Okay, so the standard play is the strike that is closest to the level you're taking the trade from. In this case, the PML 67.68.64. So that is going to be the 67.70 call option. We have the ask prices on the candle close. We're on a 2-minute chart. That's the recommended time frame to use with this indicator with the daily key level strategy. $23.80 is the ask on the candle close. You're waiting for the candle close to confirm the direction, the close above, and also with your confirmation indicator, the ribbon indicator as well. You need to also wait for the candle close on that as well. Okay, so with the contextual levels like the PML, the PMH, the YDL, YDC, and YDH levels, the way that you figure out the other two out of the money strikes, there's always going to be 3 strikes that you can use on any given bullish or bearish trade off of any main key level with this indicator. The main key levels are the contextual levels here, the PML, PMH, YDH, YDL, and YDC, as well as the main bull bear key price level, the KPL, or the BBKPL as we refer to it, and the S1 through S6 levels below and the R1 through R6 levels above. The midpoint levels and QL levels are used for tight and standard stop losses on bullish and bearish trades from the main key levels. Again, with the contextual levels, you do that inside the user control panel by either choosing tight or standard stop loss. So the first out of the money on a contextual level like this is you're looking in the direction of the trade that's up. Now, you would look for either the first midpoint level or the first main key level that is above. Now, this midpoint level is above, however, it's already so close to this, we're not going to count that. If it was up here instead, then we would count it and we would use that. This is just too close. It's only basically 58 cents or so away. So that's why you're not going to use it. So our next main key level or midpoint level above is the bull bear key price level, 67.8214. So the closest strike to that is 67.80. So that would be your out of the money one you can consider. Your furthest out of the money on this would be the next midpoint level or main key level above, and that is going to be this midpoint level. 67.9506, so that's going to be the 67.95 call option. The OTM one, the 67.80, the ask price on the candle close 18.40. The ask price on the 67.95 is 11.90. So here we're looking for at least a minimal move up to the next main level from this level here. Ideally, we're looking for a move from PML back to at least YDH or PMH. So PML to PMH is a common occurrence, not in every session. Of course, there's going to be sessions where it's just simply going to break above PMH and keep going and never goes back down to PML, or you may have sessions where it breaks through PML and just keeps going. And so that's where the ribbon indicator can also come in handy as far as confirming the particular entries. Okay, so that's going to be our minimal. In this case, since it is fairly close, it's only 14 points away, we would consider this a scalp. So for those traders that would want to use this indicator, take this trade and only get out with a scalp. Your scalp exit would be the next main level above. If this next main level above was very close, then you would not really consider that being a scalp. So generally, you'd like the scalp trade to be at least approximately one full base key level away, which is, you can see here, this is about 2/3 of a base key level here. A base key level meaning the distance between the KPL and S1 or the KPL and R1. So just from eyeballing it though, if it's very close, then you just go up to the next one. All right, so for those that are doing scalps, we have a hit of 10:22 a.m. BBKPL hit. 67.70 call. Now we have them all lined out here as we go along. So this is the 67.70, 67.80, and 67.95. These are all the bid prices on candle close. So you look at the close. Okay, so 29.70, profit 590 per option, 67.80, 23.40, profit 500 per option, 67.95, 15.50, profit 360 per option. Now the next midpoint level above would now be considered our regular trade threshold for this particular trade off this contextual level. So this midpoint level here gets hit at 10:32 a.m. It happens to be in confluence today with this YDC contextual level, which is yesterday's daily RTH session close. So it's a very important level as well, especially in confluence with this. So here it takes out both of those levels on the 10:32 a.m. candle, hits both BBKPL R1 and YDC. Bid prices on this 10:32 a.m. candle close, $37 on the 67.70, profit 1,320 per option. 67.80, 29.70, profit $1,130 per option. 67.95, $20.10, profit $8.20 per option. So at this point here, this is, as we discussed in yesterday's video and our other videos, when you have the minimum threshold met for the regular trade, you can do one of several things. The regular trade differs from a scalp trade in that a scalp trade you are looking for the quick in and out, and then you're looking for the next trade opportunity if one happens to occur. You're not doing any stop adjustments, you're not doing any scaling out, you're simply 100% in and then 100% out on scalps. On a regular trade though, when it hits the minimum threshold, you have several different options. One option is to adjust your stop loss to break even. When you adjust your stop loss to break even, you are not moving your stop loss level up to this level. You are instead changing it to the price that you paid for the option. You can also, if you want to, add a profit buffer on top of break even. So for example here, this is 23.80. If we wanted to add 10%, that would be approximately $2.40. You could go anywhere from say 10 to 15% on initial profit buffer. So with that, you could just eyeball it and say $3. That's somewhere between 10 and 15%. You want to just make sure that whatever, you're either going to adjust it to break even or you want to adjust it and be able to quickly adjust it. You don't really need to get down to the last penny of a specific percentage, although if that's your preference, you're certainly welcome to do that. My preference is just to something that's quick and easy, even if it's under the 10%. So just adding $2 as an example and making this $25.80. Just something very quick that's going to be somewhere around 10% to 15% as an initial profit buffer. Of course, you don't have to add the profit buffer. You could give it more leniency by just making it break even if that is your preference. Then the idea is to keep managing the trade level to level as the trade continues to move in your favor. If it keeps trending in your favor, moving up to the other key levels, and then as it moves to each next key level, and each next key level in the case of a regular trade is either going to be, after it meets the minimum threshold, either a main key level or a contextual level or a midpoint level, not any QL levels. So anything like that's a midpoint level, a main key level, or a contextual level, that occurs in the path in your favor after the minimum threshold has been met. It's typically like a 1.5 level move in your favor. When you're doing it on these levels, it's calculated as a 1.5 level move in your favor. It's calculated from the level that you're taking the trade from. On contextual levels, as we stated earlier, you can either set a specific take profit level in the user control panel. That's going to be a static one as a target for you, and that goes all the way up to a 30 reward to risk multiplier. The standard one would be 2. Or in the case of just using the levels, then you're using the same idea here with levels. Any contextual level, any main key level, or any midpoint level. Okay, the other option that you have at the minimum threshold is simply to exit. You could exit 100% of your contracts just like a scalp trade. So you can either adjust your stop loss to break even on all your contracts, adjust your stop loss to break even plus a profit buffer, initial profit buffer, or you can exit all of your contracts, or the last option is you can, if you are trading multiple contracts, exit somewhere between 60 to 90% of your contracts. So you're exiting the majority of your contracts at the minimum regular trade threshold level. And then what you're doing on the remaining runners that you have is you're de-risking them by moving the stop loss on those to break even or break even plus a profit buffer. So this way you're exiting and taking the profits on the majority of your contracts. You're leaving remaining runners that are de-risked you've already locked in profits by selling the other contracts, which is the majority of them, 60 to 90%. You're de-risking the remaining runners by moving your stop loss to at least break even on those. And then you're managing the remaining runners level to level if price continues to move in your favor. And then depending on how many remaining runners that you have, at each succeeding level move in your favor, you can take some more off and exit some more and leave less runners until the point where you have one runner left. And then when you have your amount of remaining runners left, then you can finally exit that remaining runner when you see fit. And again, something that can either come into play with that is also using the ribbon indicator, that if you start seeing it starting to change color, that or the upper bands in the case of a up move or the lower bands in case of a down move are starting to separate quite a bit from each other, then that can be the sign of at least a near term. May not be a full reversal where the entire ribbon indicator turns red. However, it can be the sign of a semi-reversal or dip in the case of an up move, or a bounce in case of a down move. So that can be sort of a trigger as, well, maybe I'll just take out the rest of everything now, or you could just simply wait until price has either closed through one of those two main thick yellow lines that we saw on the Annie's ribbon, and it doesn't bounce off in the case of an up move, or in the case of a down move, if it happens to break through, say, the bottom one of those two, that can be an indication that it's time just to take off your remaining runners, as a reversal may be imminent. The other way is just you can just write it out until it's hitting the exact level that you want, if you don't want to go by the ribbon indicator as a additional confirmation of when to finally exit the remaining runner. Okay, so we have here, we went through this one here. Now here at the 10:40 a.m. we have the R1 hit. Bid prices on candle close 67 70 here is 45.70 bid, so that's profit of 2,140, 67.80, 37.60, profit $1,920 per option, 67.95, 26.50, profit 1,460 per option. Now in the very next candle, as you can see, the R1 is close to YDH today, so today is a session in which many of these contextual levels are right at the other key levels given by the indicator. So in the case here, and then we also have here. Okay, so on the 1042 we have the YDH hit, 67.70 call on this 1042 aim candle, 48.20 bid. So that's here. Profit 2,440, 67.80 is now 39.90. Profit 2,150 per option, 67.95. Is 28.50, so that is 1,660 profit per option. Okay, so then we have the next midpoint level here. It's sort of covered up by these candles, but this is mid R1, R2, 68.20, 90. 10:54 a.m. it hits mid R1, R2. Bid prices on candle close 67.70 is now 54.50. Profit $3,070 per option. The 67.80 is 45.70. Profit $2,730 per option. 67.95. 33.30. Profit $2,140. Okay, so bounce off of the YDH. That's a good sign that the move doesn't seem to be over with yet. We do have the PMH, which is another prime target for price action. So it seems determined to get up to PMH. So at 1:04 p.m. we have the mid R2 and PMH hit all at the same time. Again, we have confluence here. So this is another reason to believe that it wants to tag these levels here. 67.70 call is now 65.10 bid on the close of this 1:04 p.m. candle. Profit $4,130 per option. The 67.80 is 55.50. Profit $3,710 per option. 67.95 call. 41.30. Profit $2,940 per option. Again, the 67.95 call. You started out at 11.90. It's now 41.30. So you can make a comparison here. We have 23.80 to 65.10. We have 18.40 to 55.50. And we have 11.90 to 41.30. So that'll give you an idea of when you are entering these trades, whether for your risk profile, whether you're better off taking the furthest out of the money trades or taking the mid out of the money trade, the OTM 1 strike, or just going ahead with the standard play. They each have their pros and cons. Eventually, if the move is large enough, they all start moving in lockstep after a while, depending on how large the move is. It's just at the beginning of a move, the at the money is definitely going to make more money to begin with. However, if the move trends and continues, the out of the monies catch up, and then basically your percentage gain on those is going to be more, even though the dollar profit amount is more on the at the money. The actual percentage gain is greater on the out of the monies if the move happens to be large enough. And again, with out of the monies, you're risking less money to begin with. So here, if you're starting with 11.90 and it hits your stop loss, and you end up getting stopped out, you're going to lose a lot less money than if you started out with the at the money. And then, of course, the mid one, the OTM 1 strike, is going to be strike a balance between those two. Okay, so if you are interested in purchasing this indicator, in return for you taking your time for watching this video today, you can send us an email at daytradinggps.com and request a discount promo code, and we will send you a promo code for a substantial discount for the purchase of lifetime access on this indicator. Now, you also may be wondering, how is this working for people that have already purchased the indicator? So at this time, we'd like to just show you some of the trader feedback and reviews that we've received from people using our daily key levels indicators, and that will be the final part of the video. We'd appreciate it if you would, if you did like the video, if you'd please hit the like button, as that helps us with the YouTube algorithm. So we'd appreciate that if you can just take a second to do that. And then if you'd like to see more videos, if you'd like to be notified when we do post more videos, we are going to start posting more videos on our other indicators. We do have a stocks ETFs daily key levels indicator, a Forex crypto daily key levels indicator, a futures daily key levels indicator, as well as a NASDAQ NDX index daily key levels indicator. We are going to be releasing the V3.0 versions of the rest of the indicators. Right now we just have the NASDAQ one, that is the 3.0. We're just getting ready to release the stocks ETFs V3.0 probably sometime in the next week. At that time, probably our prices will be going up at the time of the stocks ETFs V3.0 release. And then probably within 2 to 3 weeks, possibly 4 weeks, sometime within the next 14 to 30 days, we'll be releasing the futures V3.0 as well as the Forex crypto V3.0 as well. So one thing to keep in mind with all of our indicators is that when you purchase lifetime access, that also includes any updates to the indicator which we may make, and it also includes any additional versions that we release in the future with new substantial features. So if you purchase as an example, the stocks ETFs indicator now, before the price increase, then even though it's the previous version, when the V3.0 version comes out, then you'll be getting that at no additional charge. And if we release a V4.0 version sometime in the future as well, or any other future version, then you would obviously receive those as well. And that's one of the benefits of having lifetime access. Okay, so at this time, we'll go ahead and show you the feedback we've received from traders utilizing our indicators, as well as their reviews. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX daily key levels indicator. Thank you.